S&P 500 and NASDAQ are on the rise. Oracle surges, and PPI inflation bolsters Fed rate cut hopes. Despite all signs, we're in a recession. Welcome to the Between the Lies podcast, your weekly lesson on how to approach an uncertain world with positivity and balance. I'm Nicky P here with my good friend and money brain, Rob Brayton from Perfect Spiral Capital. Rob, what am I missing?
Yeah. Well, if we believe the experts, it seems like everything's going great, right? Things are on the move and so on, but it's really interesting. And I think as we kind of look at some of these numbers and we kind of tie into some of the things that we've talked about before, um, if you're really kind of looking and taking this 10,000 foot view, so to speak, it kind of feels like maybe we're being manipulated a little bit. We've had this big pressure from the president or the executive office to really try to push towards rates. And, now we see that, we have this reduction in the PPI. We have a lot of these other areas where it's like, oh, well, let's get the Fed to lower these rates when, maybe that may or may not be the right thing to do. When we think about some of the fundamental bedrock items that tend to get measured within the economy, and we see some of these things moving in different ways, it doesn't appear like we should be moving in an all-time high situation. So it makes you wonder, like, what's really the driver? Is it that the dollar's just that much or worth that much less? Because we see gold kind of on this tear as well and continuing to go up, and we know that tends to be at least a stable item of value. So yeah, it definitely feels a little bit odd, to say the least.
I don't know. Obviously, we know it's all manipulated, but for me, the thing that sticks out is that where are we at here? We have an all-time high stock market in some respects, and the thing is when I look around me, it's like, well, but what does that really mean? All that means is that everything's more expensive than it's ever been. And last I saw, things being expensive isn't good for my pocketbook. Maybe the guy selling it to me, it's worthwhile for. So, you know, I'll complain a little bit is that, I'm not an expert on the stock market, but they want to force you into playing in the stock market. They want you to set your 401k in there. They want you get a money manager and just kind of play in this thing that is inevitably, prone to crashes. And frankly, like, what do I know about playing in it? So the idea of it like being higher than ever, it's like, well, to my mind, it just means it's in like a good moment or something. For I guess the business owners, not for me.
Yeah, it certainly does feel that way. I think for the average person, a lot of it comes down to what am I willing to educate myself about? And do I really want to take the time to understand a lot of these markets, understand all these different areas that's happening? Most people don't. Let's be honest, right? People are not looking to try to learn as much as they possibly can about a given area or a lot of areas in order to understand where they should put their money. We see that so often. And I think that's why people have this complacency towards the market. And when they see that it's up, they think that it's good. When it's down, they think it's bad. And they think those two things run interchangeably as far as the current economic situation. But up does not necessarily mean good. And I think that's really what you were alluding to. It's up just means the price is up at this point. It doesn't really mean that the economy is extremely strong or that there's lots of new business creation. It does call into account, because they tend not to say this either, is how many of these jobs are, related to the government, and all the, that level of influence that you have from the government in the private sector is it's ideally not where it should be. And then, we tie that back a couple episodes ago. We talk about the how we're looking at government intervention in private companies. And when we see some of the stuff that's occurred recently, we have the government involved with Intel. We have a lot of these other factors that we've been talking about, and we have all these things happening concurrently. That is not a good place for the economy as a whole. Not a good place for the average person.
Aside from the where the stock market's at, we have a revision to job numbers that is supposed to be good. Like we have I guess everyone is excited because they're expecting the rate cut, but do you feel as though, I mean, I'm imagining you feel like I do, that we shouldn't have anything to do with rates when it comes to our government. But do you see it like now, like, I guess for me it's like until you pay off the debt and get your deficit under control, what's the point in you know lowering your interest rates?
Well, I mean, lowering the rates only makes that deficit and the current state of things worse. So it doesn't really help us necessarily. Sure, it might do some things within the economy from a lending standpoint or some things along those lines, but really it doesn't help you and me. And that I think is the part that you can, once you become aware, and I think this is the challenging part about what we do and focusing so much on education about becoming what to be aware of within the economy, what to become aware of when you're thinking about your own personal financial situation, is that once you become aware of it, you start to see where the manipulation is. And you start to see, like, oh, just because rates are going down, that's a good thing and we should be happy and go buy all we want. No, I mean, generally that's there to, manipulate people into buying things that they probably don't need, purchasing homes maybe they don't need. And, it ends up in a really poor place in most cases, especially when you have people within the government trying to manipulate these areas. That's not what we should see if the Fed was actually doing what it's supposed to do, which we all know it isn't.
The thing that I constantly come back to is that numbers aren't bad. Like we want the numbers that we can get that have real world meaning. The problem is that when we get numbers now, they're obfuscated by government or intervention, bailouts, and they don't represent actual market necessity or direction of markets. So when we sit here, we see people getting really excited because, oh, we think they're gonna make some easy money again. Well, we don't want easy money. We need to get away from easy money. We need to have solid money, sound money. But as long as the incentive in there is to buy us off as voters, you know, there's always going to be a lie in those numbers. Now, there's given the information we've gone over here, what do you think the good news is?
Is that a feels like a little bit of a loaded question? Um, I, yeah, I it's tough to say, right? I think for the people that have money in the market, sure, it's good temporarily for them. Um, you know, you, if that's the case, I don't think that um, you know people that are maybe looking to purchase a home, if the rates do come down, sure, that might help you temporarily. But these are all really short term aspects to what's happening, and I think those are semi positive areas. But I would really challenge people to think a little bit differently. And it's like, what is, if your foundation of what you've built your future on is influenced heavily by somebody else or what happens in the market or a job numbers report, that doesn't bode well for you. And I think that's really the thing that we like to challenge people with, is to think a little bit differently. What if your main foundation wasn't impacted by these different news reports, or Oracle's earnings report coming in and all of a sudden the market jumps or what have you, right? if your firm foundation was built in a way that allowed you to have stability and then be able, and it's compounding on a consistent basis year over year, what would that do for you? How would you think differently? How would you maybe consider investing differently if you had that downside risk? I think a lot of people just don't think about it that way. And they're always thinking and kind of being told, well, you need to be in the market. You need to do this. Well, who's telling you that? And what do they have to gain from it? I think that's a question that a lot of people don't ask.
They have a lot of my money to gain if they have inside information. I don't.
Well, maybe, but
It's right on. Well, I don't want to belabor things too much today. So, Rob, why don't you tell people where they can check us out
yeah.
and learn more?
Yeah, well, thanks again so much for joining us on this week's episode of Between the Lies. If you've watched this episode, you're clearly interested in money, and we've got a free toolkit to be able to help you learn more about money and your money. So, and not only that, we can help you demystify some of these things that we've been talking about here. So, if you could go on over, visit perfectspiralcapital.com/podcast, and you can take a look there and find out a little bit more.
Thank you.